Ladies and gentlemen, as per the title, not only do I think people are wrong about the Bitcoin halving, I think also there's a sizable portion of people who are directly lying to you, deliberately misleading you about what to expect at the Bitcoin halving. I'm going to be showing you the truth backed up by charts today, and furthermore, I'm going to be diving into two macro trends. One of them I've discussed before, and one of them is brand new. Now, these macro trends are not perfect, and they could break, but right now they do suggest that Bitcoin will not break the current level of resistance until around July or August this year. Will that play out? I don't know, we'll wait and see, but right now that's what the trend is suggesting. And these trends have existed for a decade and have not broken yet. So we'll have to see. We'll look in this video. Part one is the halving, part two is the macro trends. Ladies and gentlemen, let's get into it. Guys, before we get into the content today, we need to check out a couple of things. VIP group on Telegram for altcoin trading. The link is down below. It will take you to this channel, which shows you the pricing details and the PDF of all the trading results. If you want to trade altcoins with me on Telegram, that's the place you can do it. We've also got the BingX and BitGet exchanges. BingX is global, non-KYC, and BitGet is global minus the USA and Canada. So take your pick depending on your geographical location. They're both very low in trading fees. They've both never been hacked before. My links are down below for 15% trading fee discounts. And finally, if you want to learn how to trade, learn how to do technical analysis, and learn more about the market in general, the Crypto Academy's Become a Trader course will do you very well. The link for that course and all the information is on the website down below. Guys, without further ado, let's get into the content. I've got two parts of this video. Part one, the halving, discussing the halving and discussing what people are getting wrong about the halving. Some misrepresentations been going around about the halving that we can be very easy and very quickly clear up, okay? And then second of all, I'm going to be discussing this new chart here, which relates to our chart about the macro trend on Bitcoin. I'll briefly recap that, but I know you guys have heard it 10 times at this point. We've got a chart discussing Fibonacci levels. We've got a chart discussing the monthly chart RSI in more depth. And a chart that's very interesting because it gives us an exact date range prediction about when Bitcoin will be breaking above this RSI level, and we can kind of extrapolate that data further and kind of get a better idea about what the Bitcoin structure should look like and what the scenarios really are for Bitcoin. But first and foremost, let's focus on the halving. Now, I'm going to state here very proudly and very clearly, I believe that not only are most people wrong about the halving, right, on a nuanced perspective, which we'll discuss in a second, they're also lying to you about the halving. Now, lying is obviously an accusation. It's not just a word like wrong. We're wrong. Oh, yeah, you could be making a mistake. You're wrong. That's okay. Lying is intentional deception. And I think that people on crypto YouTube, crypto Twitter, a sizable portion of people are actually lying or intentionally misleading people into expecting something from the halving that has never happened before. Okay? And they're not really giving any proper justification as to why that will be the case. And I'm going to tell you exactly what I mean by that. Well, look, people have this idea, fundamentally, and they've gotten this idea mostly through crypto YouTube, crypto Twitter, because it's certainly not through the charts, right? The charts are very clear. They have this idea that as soon as the halving occurs, the bull market's going to start, Bitcoin's going to pump. It's not really that simple, okay? We know as a fact, we look at Bitcoin dominance, we look at altcoin charts, we look at Ethereum charts, we look at even the Bitcoin chart. The halving itself does not lead to an immediate surge in price action, okay? We know for a fact that the surge in price action actually starts a bit of a while after the halving. So just quickly getting rid of this whole, the halving's going to immediately pump Bitcoin, it's just not true, okay? And we've seen 3 halvings on Bitcoin now. You know, a lot of people get the idea for some reason that, you know, only the 2016 and 2020 halvings count. Why would that be the case? We saw a halving in 2012. What do we see? Well, we see a situation in which we saw the halving in 2012. This is a 2-week chart, by the way. So 2-week. Each candle is worth 2 weeks. So we saw a situation in 2012. We saw the halving. And it took basically three 2-week candles. So 6 weeks total. Let's say 5 weeks. Okay, so over a month for Bitcoin to actually see any significant positive price action after the halving. We go to 2016. Not only did we not see positive price action after the halving, we actually saw about a month of downwards price action in which from the halving candle on the 2-week chart, we dropped 26%. And it took us literally about 100 days to break above the level that we saw the halving from after that correction, right? 2020. All right, obviously it went a bit faster in 2020. We obviously saw 2020 extrapolate pretty high up to an original peak that was much higher than expected, which led to a very diminished second peak. A lot of people said there's a double top. I've debunked that many times, but the fact of the matter is we saw less of a delay in 2020. But even with, seeing less of a delay, I think for the most part here, what did we see? We saw the halving occur on this 2-week candle. We saw one 2-week candle that was green, and then we saw 3 separate 2-week candles that were downwards consolidation, correction, consolidation, whatever you want to call it. That's 6 weeks there. That's over a month and a half of correction and consolidation, just 2 weeks after the halving. So I think it's very clear. Okay, and this is very simple. I don't know why there's any confusion about this whatsoever. If people just looked at the chart for 10 seconds, they'd find this out. It's very clear that the halving itself does not lead to immediate upside price action. Okay, we've seen 3 data points, 3 separate occasions where this has been proven to be the case. Not only that, but we can go a little bit further, and we can actually look at previous all-time highs. So let's draw in our all-time high in 2011, and we can see that from the halving, it took around 90 days, around a month and a half. So let's say 100 days. To break above that prior all-time high. Let's go ahead and draw in the all-time high here from 2014. From the halving, it took almost 220 days. And in 2020, we can draw in the all-time high here. From the halving, it took almost, again, around 220 days. So spanning from 100 days to 220 days. If we're going to take this seriously again and say it's going to work again this cycle, which it may not, but let's just assume it does because that's the trend at the moment, then from the halving to a break of all-time high, at a minimum, just like 2012, sorry, it's going to be 100 days. Okay, that would take us to around July 2024, breaking all-time highs. But at a maximum, we're going to be 220 days like the last 2 cycles, and that would take us to around December 2024, breaking all-time highs. And December 2024 breaking all-time highs lines up pretty well with the date range trend on Bitcoin. The date range trend being, if we measure the amount of time it takes from all-time high to breaking that all-time high, on 2 separate occasions now, it has been 1,100 days, and if we extrapolate that from the last cycle, that would take us, again, to around December 2024. So the fact of the matter is, right, the first part of this video is coming to a completion now. I want to recap the points. The first point is this. Okay, most people don't understand what the halving does to Bitcoin fundamentally. They know it leads to a bull market, and they're correct in saying it leads to a bull market. It has historically led to a bull market, but it's not the halving necessarily, as an immediate short-term effect that kicks off the bull run right there. No, the halving's just kind of like a data point along the way of a pre-structured cycle that leads to a bull market a little bit after the halving. Because we know for a fact now that on every single occasion so far, all 3 of them, the halving itself hasn't really led to immediate upside price action. In fact, it led to the opposite in 2016, and it led to consolidation in 2012 and 2020. So let's erase this idea. Based on the macro trends, based on the measurable data, everything else is noise. It doesn't really matter what you think. The fact of the matter is the measurable data, which we're basing our entire cyclical prediction off of, and everyone is doing that, by the way, even the people who say, the ETFs are going to lead to a bull market, they're still basing their predictions on a 4-year cycle because it still coincides with a 4-year cycle. The fact of the matter is an election cycle and 18.6-year real estate cycle. The fact of the matter is everything on Bitcoin revolves around 4-year cycle to some extent, or to some, degree, I should say. The fact of the matter is the halving as an immediate short-term event is not a trigger for a pump on Bitcoin. It could actually be quite the opposite, okay? And what we could be seeing now, and I think what's more reasonable to assume, is the run-up we've seen, obviously since November 2022, but obviously now as well since September. Not only is that run-up pricing in ETFs and I should say, bearing the effect of ETFs, because we're seeing ETF buying now. It's not just pricing in anymore, it's actual buying coming from ETFs, but it also could be pricing in the halving. People could know the halving is a bullish event, okay, on a macro scale, and they could be buying before the halving, and then when the halving occurs, it could actually be a sell the news event. That's a completely plausible scenario, and there's no reason why anyone should discount that at all. I'm not saying that's the case, I'm just saying that's a plausible scenario, because that's literally what happened in 2016. And we weren't far off it in 2012 as well. In 2020, we weren't far off it either. We only went up a little bit and then didn't go upwards again for a certain period of time. It took us 220 days from the halving to break all-time highs. So yes, the halving is a bullish event on a macro scale because it, depending on how we react to the halving and depending on what happens after the halving, it's an extra sample point for confirming the 4-year cycle will play out. But overall, the immediate short-term effect is not actually as bullish as people think it is off the bat. It could actually be a sell the news event. So now that we've debunked that kind of, or given clarity, I should say, to that kind of whole halving narrative, scenario, whatever you may call it, we want to move into the second part of the video, and this is quite interesting as well. Now, before we move into the brand new chart, I just want to give you context. Right now, Bitcoin is at $51,000. We have multi-layered resistance on Bitcoin at 53K. Not only coming from the Bitcoin chart, coming from Ethereum, total cryptocurrency market cap, coming from the $1 trillion market cap resistance on Bitcoin at 52K. So that whole level, 52 to 53K, is layered with resistance. That doesn't mean we won't break it. Okay, it just means that it's layered with resistance, okay? And obviously, doing things like longing into resistance, buying into resistance is, if you trust TA to any extent, is not really a good move. You want to be waiting for that zone to break. Right now, we do have a macro trend on Bitcoin. I've discussed it so many times. That kind of says that Bitcoin should reject here. Now, I'm not predicting it's going to reject here. In fact, I've very clearly admitted in the last few videos I made that I don't really trust TA right now to a major extent. I'm just observing it. And what I'm kind of observing here is a macro trend that shows you that Bitcoin structurally from cycle to cycle is the same. So our structure here was the same as the structure here, as the structure here. Now, they weren't identical, but they had similar elements. One of the similar elements was this yellow horizontal line. The yellow horizontal line stems back from the bear market dead cat bounce, the first bear market dead cat bounce of the bull market, and it's outlined here in the monthly chart. And you can see that in the run-up before the halving, we reject from the yellow horizontal line. That's happened on two separate occasions, and right now we're in that vague region. We could see a rejection from it. Not only that, but we reject from a yellow horizontal line on the RSI at 67 that lines up with the yellow horizontal line in the price chart. So right now we're actually in a situation where Bitcoin is threatening to break this macro trend, but it's not quite out of the woods yet, okay? It still is at threat. Bitcoin is still at threat of rejecting here and going downwards before the halving. And closing a monthly candle above 49K, or more specifically, let's be honest, breaking 53K is really what we need to be seeing on Bitcoin, because I wouldn't really be comfortable saying Bitcoin's out of the woods if we close a monthly candle above 49K, but we're still below the 53K resistance. The fact of the matter is the 53K resistance on Bitcoin is what we're actually looking at. So if Bitcoin breaks $53,000, cool. We're out of the woods. We don't need to worry about this macro trend anymore. But as of right now, this macro trend is still a threat. And this macro trend does suggest Bitcoin goes downwards significantly before the halving, and even maybe even after the halving, as we've seen by looking at historical halvings. They don't necessarily need to be bullish events. We could see a correction on Bitcoin extend past the halving and then go upwards, towards the middle or end of this year. These are real scenarios that we have to consider. Again, I'm not making predictions. I don't think TA is overly reliable at this point in time, especially on a medium short-term scale. But the macro trend is there. And if we're looking at another macro trend, we can look at it from a slightly different light. And that is a macro trend in regards to Fibonacci. You can see that we do a Fibonacci extension, or sorry, not a Fibonacci extension, a Fibonacci retracement from the peaks of each cycle and bring it all the way to the bear market. So you can see that 0.618, right, that green level there is the rejection zone, right, that we saw in 2016, that we saw in 2019, and that we're seeing right now potentially be broken above, but we're still kind of testing it. And that rejection zone, again, lines up with the yellow horizontal line on the price chart. So this yellow horizontal line is not weak, okay? It needs to be considered. It's a Fibonacci level, it's an RSI level, and it's a price level. And quite frankly, it's a cyclical level, okay? So as I've said over and over again, you're probably so sick of hearing it by now, Bitcoin is still at threat here for a correction before the actual bull market starts off. And I'm not willing to write that off at this point. Furthermore, we can look into a unique chart here. We can see that there's a couple of lines here on the Bitcoin RSI. First and foremost, 67, which we looked at over here, but I've drawn it in a different way here. And then we've got 97. So 97 is kind of where we've peaked out previously, but we can overall kind of delete that because we didn't quite peak out at 97 on the monthly chart RSI in 2017, and we didn't quite peak out at 97 in 2021 either. So I think 97 is worthy of being deleted, but overall, we have a descending resistance line, which has kind of marked the Bitcoin macro top. So when we get close, or if we get close, but more importantly, if we're speaking cyclically, right, when we get close to that yellow resistance line, that would be an indication that the bull market will have topped out, and that would be an indication to sell Bitcoin. But that's kind of a topic for another day. What I'm focusing on right now is this kind of white line. And you can see that cyclically speaking, what does Bitcoin do? Okay, we have the bull market. We drop below this white line. And from the time in which we drop below this white line to the time in which we get back above the white line, it takes about 1,000 days, okay? It happened again in 2018. It takes about 1,000 days to get back above that white line. Now, if it was to take about 1,000 days, from the time we drop below it in the double top peak, okay, for the second time, double top peak, because that's the actual bull market peak in 2021. If it took 1,000 days to get back above it, that would take us to around August this year, okay? Maybe July, if we're pushing it, but July, August this year, Bitcoin would be breaking above 67 on the monthly chart RSI. Now, what does this mean? Okay, it means something very simple. And let me kind of give you context before I say it. 67, the yellow line on the RSI, lines up to 49K as a monthly chart resistance zone, okay? So the fact that we should be seeing, as per the macro trends, a break of 67 on the RSI at around August to July this year means that we are too high too soon and we should reject from this level, and we should not surpass this level again until July or August this year. What does that mean? It means we need to go downwards until around June or early July and then start the bull market from July or August. That is what the macro trend is suggesting. Let me say it one more time, okay? The macro trend on Bitcoin, which could be broken if we break 53K, okay? But right now it's still present. The macro trend on Bitcoin that is still active, still alive right now, suggests that Bitcoin will go downwards, okay? Starting basically around now, until around June or maybe July, and then start the bull market from there. Now, I know the halving's in April, but in the first part of this video, I debunked the idea that the halving needs to lead to an immediate price gain. So we very well could be in a scenario in which there's two kind of options for Bitcoin, right? Option one, we break 53K now, and we invalidate a bunch of macro trends and we go upwards. Or we follow the cyclical theory, we follow the macro trends, and we go downwards for basically 3 months, if not 4 months, and then we start the bull market from there. That's what we're facing here for Bitcoin. Now, the good news is, either way, we're going to start a bull market this year. The bad news is, we could be seeing 3 to 4 months of headwinds and corrections on Bitcoin and consolidation that a lot of people right now, I think, aren't expecting. I think a lot of the people right now are in kind of bullish mode. They're in bull market mode. And I think, obviously, the data right now, I think it's obvious, really. The data right now, obviously, isn't really there to suggest that that's the case. Now, break 53K, that's a different story, okay? But right now, as of this moment, we're at 51.2K, facing a major macro resistance that we've been struggling to get above for about 9 days, and we haven't done it yet. That's not really a strong position for Bitcoin to be in. I'm not predicting anything. I want to make myself very clear. I don't want to make predictions here. I'm purposely stepping away from predictions here. What I'm simply saying is that these macro trends have never broken before, okay? I understand we're in unique market conditions. I understand we have ETFs, which has never happened before either. I understand that like 10 to 15% of the trading volume on Bitcoin is just buying from ETFs and it's just not really stopping right now. I understand all of that. But I also understand that just because we have ETFs doesn't mean I can ignore every single charting formation Bitcoin's ever had. Okay, right now the macro trends are very clear. All right, and we have to consider them. So do with that information what you will. I will be repeating this information in tomorrow's video because I think it needs to be heard, and I don't think enough people are watching these videos right now, to be honest with you. So I will be repeating this information pretty much word for word and adding in a few nuances in tomorrow's video. So stick around for that one if you're interested, or don't. But I think it's interesting. I think it needs to be discussed. I don't think people are discussing it to the full extent of which I am right now. So if you appreciate the content, thank you guys for watching. I hope you enjoyed. Please go ahead and leave a like, comment, and subscribe. And check out, as I said at the start of the video, VIP group if you want to trade altcoins. BingX and BitGet exchanges, and then finally the Crypto Academy if you want to learn how to trade. Thanks for watching, guys. Have a good one.